Hello, everyone. I'm Chris Kapches, president of Chestnut Park Real Estate, and today I'm going to be providing you with the August market report for the Toronto and region resale market. And I'm going to provide it in a slightly different manner than a way I have previous market reports, more with a view to where we're going, how the market is evolving, as opposed to just concentrating on the numbers. The numbers themselves are kind of dismal. In August, there was only 4,975 sales that were reported. That's one of the lowest that we've seen for August in quite a long period of time. Last year, there was 5,251 sales that were reported. So compared to last year, we were off by 5.3%. But more importantly, to date, we've recorded about 47,000 resales. At this rate, we'll probably see 63,000 sales by year end. Put that number into perspective. Last year there were 66,000 reported sales, which was in and of itself a anything but robust market period. But to put it into even greater perspective, if we look at the years from 2011 to just before the beginning of the pandemic, the Toronto region marketplace was averaging about 90,000 reported sales annually. In 2016, we did about 113,000. And in 2018, we dropped to a little over 78,000. And that was primarily due to the implementation of the foreign buyers tax, which had a negative impact on the market. But then it resumed again before, of course, we hit the COVID market. So we're averaging 90,000 sales a year from 2011 to just before the COVID market. And here we are this year projected to do only 63,000. That's quite a disparity in numbers. What we also need to consider is over that same period of time, the population of the Greater Toronto Area has probably increased by more than 1 million people. So here we have huge population growth, and yet our sales for 2024 are going to be substantially below what we were averaging leading up to the pandemic market. However, as bad as that may sound, I believe that August is sort of the end of what I will call the dark market period. And the reason I say that is because in early September, just before this report is being presented to you, the Bank of Canada reduced its benchmark rate, bringing it down now to 4.25%. That's still substantially high. And again, to put that benchmark rate into perspective, throughout that period that I was just referring to, from 2011 through to 2020, the benchmark rate never exceeded 1.75%. And in fact, through most of that period, the benchmark rate hovered around 1% on average. So to be at 4.25% is almost 300% higher than the highest that it reached during that period. Obviously, one of the reasons why the market was producing, as I said, on average 90,000 sales a year, and the average sale price continued to go up. So what we have ahead of us is the bank has indicated that it is going to continue reducing rates. And there's been some economic news recently, higher unemployment rate, inflation dropping, that is likely to see the bank fulfill that promise. So we're likely to see in October and in December, when the bank next meets, the bank rate coming down probably to the range of about 3.5% to 3.75%. Now, that's still high based on what I just indicated as what was happening with the bank rate through that decade leading up to the pandemic. But that is going to have a positive impact. It's going to reduce borrowing costs. It's going to allow people to qualify that currently can't qualify for mortgage financing. And we're going to see activity pick up. So we'll see that gradually happening through the remainder of 2024. And then I believe we'll see it begin to accelerate into 2025. It's not going to be the pandemic market again. And in fact, I don't believe that through 2025, it's even going to be reminiscent of the markets that I just discussed, which were those markets producing about 90,000 sales annually in the decade leading up to the pandemic. But it is evolving in the right direction. We have some, I'll call them even structural problems in the market. The condominium apartment marketplace is very stagnant right now, and it's not likely to unravel itself for some time. Average sale prices in the case of condominium apartments have come down fairly dramatically. They came down again in August. I think sales were off by about 14%, average sale price down by 6%. So there were just too many of those built, and unfortunately, in terms of form, they're, to use a cliche, more like boxes in the sky as opposed to properties that could accommodate families. The freehold side, detached, semi-detached properties, they actually didn't do too badly in August. They're holding their strength, and they're keeping the average sale price up. The average sale price came in at $1,074,000, almost identical to where it was last year at this time, $1,082,000. But as we move through 2024 into 2025, and as I said, as we see the volume of sales increase because of the cost of borrowing becoming more attractive and more buyers qualifying for mortgage financing, we're not going to see the average sale price begin to pop again the way it did through the pandemic. It's going to remain relatively stable with perhaps moderate increases. And one of the reasons for that is we have quite a bit of inventory out there. At the end of August, there were over 22,000 active listings. Mind you, about 35 to 38% of those were condominium apartments. But that large inventory has to be absorbed. That's 46% more than the inventory we had last year. Again, as we move through the remainder of 2024 into 2025 with the benchmark rate coming down, affordability improving, it'll be marginal initially, but it is improving. We're going to see sales starting to pick up, and definitely picking up as we move into 2025. So this report is a bit of a good news, bad news report. The bad news, of course, is that August was not a particularly robust month, but I believe it's the end of the months that haven't been robust, and we're going to see the improvement that I've been talking about starting to take place. So I look forward to getting the September data and presenting it to you. And I'm fairly confident that it's going to be much more favorable than the August data that we experienced in the Toronto region resale market. So until then, stay well, and I look forward to presenting that report to you. Thank you.